Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, we're going to go over something that was just released. I heard about it last night on the X22 report. If you're not watching Dave, the X22 report, you should be. But this was a very interesting report that just came out. It was a letter that actually came out from the Federal Reserve. So let me share my screen and let's talk about this letter and what the real ramifications are for crypto. So here we go. And let me get over to the screen so I can start. So supervision and regulation letters. Engagement in crypto asset related activities by Federal Reserve supervised banking organizations. Basically, this is a letter from the Federal Reserve to all of their regional reserve banks and guidance. And it's interesting how they phrased it. This letter applies to all banking organizations supervised by the Federal Reserve, including those with $10 billion or less in consolidated assets. So that's all the banks. That's a lot of banks, up to the really, really tiny ones. And I thought, well, do they have the word opportunity? So I didn't highlight this, but so this is an important one. I'm going to start with this paragraph, and there's going to be a lot of reading. Sorry, but I need to go over this with you guys. The emerging crypto asset sector presents potential opportunities to banking organizations. Sounds positive, right? To banking organizations, their customers, and the overall financial system. However, crypto asset related activities may pose risks related to safety and soundness, consumer protection, and financial stability, including but not limited to. And I'm going to go over these 4 different categories. So first, I'm going to read this first one, technology and operations. The technology underlying crypto assets is nascent and evolving. That means it's young. And poses novel risks such as those associated with cybersecurity and governance of the underlying network and any related arrangements. These risks are particularly heightened when the underlying technology involves open, permissionless networks. Basically, some of these things can implode and go to zero, just like a stock can. Anti-money laundering and countering of financing of terrorism. So this is the AML and KYC type stuff. Crypto assets can be used to facilitate money laundering and illicit financing. Some crypto assets have limited transparency, making it difficult to identify and track ownership. Let me drop out of here for a moment and just talk. Okay. So first off, they're talking about projects that go to zero. Now they're talking about privacy coins and coins that can be used for, what was the phrasing? Again, I think it was illicit financing and money laundering. So yes, that's all true. It can be used that, but do they ever mention that more dollars are used every day for illegal activity than all of crypto combined? Of course, they don't say that. Back to the article. Next, consumer protection and legal compliance. Crypto assets pose significant consumer risks, such as those related to price volatility, misinformation, fraud, and theft or loss of assets. In addition, banking organizations engaging in crypto asset-related activities face potential legal and consumer compliance risks stemming from a range of issues, including, for example, uncertainty regarding the legal status of many crypto assets, potential legal exposure arising from consumer losses, operational failures, and relationships with crypto asset service providers, and limited legal precedent regarding how crypto assets will be treated in varying contexts, including, for example, in the event of loss or bankruptcy. They are trying to scare you. They are trying to scare everybody, and especially the banks, not to work with crypto. Fourth point, financial stability. Certain types of crypto assets, such as stable coins. This goes right back to the Luna issue. If adopted at large scale, could also pose risks to financial stability, including potentially through destabilizing runs and disruptions in the payment systems. And they given a footnote number 2, President's Working Group on Financial Markets from the Treasury Department, from the FDIC. So basically, they're trying to say stable coins could be a detriment to the U.S. dollar. Given the heightened and novel risk posed by crypto assets, the Federal Reserve is closely monitoring related developments and banking organizations' participation in crypto asset-related activities. This letter provides that a Federal Reserve supervised banking organization engaging or seeking to engage in crypto asset-related activities should notify its lead supervisory point of contact at the Federal Reserve. Further, notification of proposed activities. So to continue about that notification, a supervised banking organization should notify its lead supervisory point of contact at the Federal Reserve prior to engaging in any crypto asset related activity. Any supervised banking organization that is already engaged in crypto asset related activities should notify its lead supervisory point of contact, the Federal Reserve, promptly regarding the engagement in such activities. If it has not already done so, Federal Reserve's supervisory staff will provide relevant supervisory feedback as appropriate in a timely manner. Sure they will. Lastly, in all cases, a supervised banking organization should, prior to engaging in these activities, meaning get involved in crypto, have in place adequate systems, risk management, and controls to conduct crypto asset related activities in a safe and sound manner and consistent with applicable laws, including applicable consumer protection statutes and regulations. It goes even further. And then finally says state member banks are also encouraged to notify their state regulator prior to engaging in any crypto asset related activity. Lovely. So what does this all mean? Federal Reserve is concerned that banks, which are already starting to do so, are going to be letting people get involved in crypto. They're getting involved in Bitcoin. Other banks are allowing this internationally. I know that some banks are starting to talk about this, and they already have permission to be custodians for crypto. The Federal Reserve is very much concerned that people are going to be exiting the dollar system and moving their money, their wealth, their value into crypto, where it actually has a chance of holding its value. That is counter to the idea that they want all their money or all the assets in the dollar because they want to preserve the dollar system and the credit system and the FICO score system and all the other stuff system, that they want to preserve it for as long as possible and keep people out of another system where people can get into other things like crypto. So now they're going to create all these different hurdles, scare all the bank managers and the people that run banks, and even small banks down to $10 billion in net assets. Those are tiny banks. That's not a lot of assets at all. Assets under management of $10 billion is pretty small banks, but they want all these people to be concerned and scared and basically not offer people crypto. They don't want to make it easy for the average consumer to move their dollars into cryptocurrency, even something as stable or as reliable as Bitcoin or even Litecoin, the coins that have been around forever and never gone down, or have like the most powerful network in the planet when Bitcoin and Litecoin has been around for 10 years, never gone down. So let me see if I can quickly find another story. Let's see, offering crypto. All right, I found it. Let me share it. Here we go. Here's an article from Reuters that came out in April. How U.S. banks are dipping their toes in the crypto water, and it's all these different banks. So Bank of New York Mellon announced in February that it would hold, transfer, and issue Bitcoin for asset management clients. Launch is expected later this year. U.S. Bancorp went live in October with Bitcoin custody services. Bitcoin company NYDIG is acting as a sub-custodian. Services are geared towards institutional investment bankers or managers. State Street Corp in March said is offering cryptocurrency custody services in partnership with crypto infrastructure platform Copper. It's also waiting regulatory approval. Deutsche Bank revealed plans to develop a service to hold and trade cryptocurrencies for institutional investors in a 2020 report published by the WEF. And it already done a proof of concept. There's two more. JP Morgan Chase in July last July allowed its financial advisors to accept buy and sell orders from its wealth management clients for 5 crypto products. Wells Fargo began offering its wealthy clients cryptocurrency exposure in the summer of 2021. So here's all these articles, right? Here's all these articles about all these major banks offering crypto products. Federal Reserve is seeing that's getting close to critical mass, and they are losing control. It's a little late now with the cat out of the bag for all these different companies, even though some are saying they're waiting for regulatory approval. But they're trying to corral this as best they can and get out in front and just saying, hey, wait a minute. All these banks are offering people crypto products. How do we get out? How do we stop it? How do we slow it down at least so we preserve the U.S. dollar that much longer? Well, they issued this letter that came out yesterday or the day before. And it's SR 2206, I believe it is. And they say it's the crypto opportunity, but then they give all these reasons why they shouldn't be involved. So the Fed's scared. The Fed's concerned about the dollar. Crypto is the future. It's pretty obvious now. Even the Fed is talking about it, and all the banks are too. So what are your thoughts? What do you think about this letter? What do you think it's really trying to say? Do you agree that it's just a scare tactic for the banks? And we really shouldn't be using the banks anyway, because you can be your own bank with the crypto. And if you hold the keys, do the secure methods. As I've talked about many times before, you can be your own bank and you don't need to be in the dollar system anymore. So not financial advice, but if you want to get around it, if you want to be in crypto, if you want to get out of the dollar system and be in the crypto system, there are certainly paths to do that. So with all that said, I look forward to your comments. I'd love to hear what you have to say. I'm going to close the door on the bureau, say file leader one more time, and I will talk to you soon. Take care.